take a sector deep dive here after Kraft Heinz did not impress on earnings. The staple sluggishness continues down over the past year. Taylor Conrad covers consumer stocks and auto stocks at Argus Research. Taylor, welcome back to the show. Firstly, the Kraft Heinz earnings. Let's talk about that for a sec because it seems like the market just doesn't have a lot of staples it likes right now.
Yeah, I mean, the Kraft Heinz reports came in and they weren't great. EPS was down 8%. They did say that 7% of that was the impact from the 53rd week in the previous year, but sales were down 7% for the fourth quarter, which is not great. Up 0.6% for the year, but that's not the growth that we should be seeing. Volume and pricing for this company has definitely been an issue. Over the past 8 quarters. Prices have been up 12%, while volume has been down 4%. And so we're really seeing the trade-off between price and volume for this company. They also provided their outlook, which wasn't super enticing either. The organic sales growth of 0 to 2%, but adjusted EPS growth of 1 to 3%. Now, that's still not a great growth rate, but I mean, it's better than 0 to 2% from that top line.
Okay. So, I mean, things are not terrible here, right? They improved. It just kind of seems like the market maybe wants more, has other sectors like discretionary stocks to pile into if the economy's staying strong. I mean, do you think they're just kind of like a out of favor group right now?
Well, I think there's a lot going on in the consumer space. We've got the pressure of inflation on the consumers and also on the companies themselves with their inputs. And that's really driving volume down. And there's also a couple of big trends that are going on in the consumer landscape where we've got, companies, some of them pushing towards health foods and some of them more really focusing on the snacks. And I think that as inflation, eases, we'll see a lot of this volume, return or come back up.
Are there still risks from the weight loss drugs and the Ozempic stuff? I mean, a lot of these got really hammered when those first hit the market. Some have recovered, some more mixed. Is that still a real threat?
So, with the management that I've talked to, they're not super concerned about it. I mean, it's on the radar for sure. But, a lot of these companies have been around for a really long time and they've seen like several diet fads that come and go, so they're not concerned about this from a long-term standpoint. Maybe we'll see some results in the near future, but I wouldn't say that it's going to be a huge thing for these companies.
Okay. One of the big winners over the last couple months last couple of years rather in this group that broke down pretty hard the last year since it's Valentine's Day. Let's talk some chocolate. Hershey had this big run from 2021 up until like last spring. What's the status of that company? Because it seemed like it was doing so well and now it's gotten hammered.
Yeah, I think a lot of that was residual from the pandemic where people were really looking for their comfort food. Like I said, we've got that health trend going on where people are really focusing on their sugar intake and how many calories they're taking, and chocolate really just doesn't fit into that. That's not to say that like this still isn't a great brand and a great company, but I think that, we just have to think about it in terms of how things were before the pandemic, before people turned so much to comfort food. Hershey's has made some great acquisitions. Dots Pretzel has done really well for them. And so, I think that it's just going to be maybe like we see some of this consumption come down, but I don't think that it's going to be, detrimental for Hershey's.
Okay. The cocoa commodity price has been soaring. Does Hershey not have any elasticity? Can they not bring up their prices a bit? Or they just have to literally eat all that or what?
No, so they do raise their prices over the past 2 years. It's been prices have been up 8% and volume was still up 1% over that time period. So they're raising the prices, but it seemed for a while there that people were still willing to pay for it. Consumers are really feeling the burn of inflation, and I think that also contributes to this.
I'm kind of surprised we haven't heard more about like big M&A transactions between some of these staples giants. I mean, not that the government maybe would be a big fan of it. They try and block everything, but I would think that maybe one solution in an elevated inflation environment would be to find some synergies by combining. Is there any chance of that?
I mean, I haven't seen anything of the sort for these large companies combining, but General Mills in November purchased Farah Pets, and so like they bought it in November, and they're hoping to have it help expand their pet segment, which is like about 12% of their revenue. And so it's their first step into the pet supplement market. And as you know, during the pandemic, that was a big trend as well. People getting into their pets and like making sure that they had the right health things and all of the fancy treats and nutrient supplements. And so that trend hasn't, I mean, it's faded a little bit, but it's still strong. So General Mills is trying to, get in on that.
Yeah, they've basically become a pet proxy at this point. All right, thanks for the update, Taylor. Very helpful. Appreciate it.
Thank you.
You got it, Taylor Conrad, Argus Research.